Exercise 32 on page 46. We're going to prepare a statement of retained earnings using the information given to us above exercise 31. So we're looking at the list of accounts and we need to determine what goes on the statement of retained earnings. Statement of retained earnings is showing us where did our retained earnings begin and what is our ending retained earnings balance. This is going to be for a specific period of time. So when completing any financial statement, you have to include the heading, which is going to include the name of the company. We're looking at Wilson Towing Service, the name of the statement, statement of retained earnings, and the time period. Statement of retained earnings will always be for a specific period of time. So we're looking at for the month ended June 30th, 2014. So when we look at the statement of retained earnings, we're looking at where did we start, what changes took place that affect retained earnings. Revenues, expenses, and dividends will affect the retained earnings. So we want to take the beginning retained earnings, add to that our net income, which is going to be revenues and expenses, subtract out our dividends to get to our ending retained earnings balance. So we have to use our beginning retained earnings balance, which is the beginning of this month, June 1st, 2014. We add to that the net income for this month, subtract the dividends to get to ending retained earnings. So our beginning retained earnings is given to us in the information. So we're told we have $950 of retained earnings at the beginning of the period. We need to add to that the net income, but if we look at the list of information, we don't have an account for net income. We have revenues and expenses, and so we can account for the amount of net income is based upon revenues minus expenses. Our revenue is $11,200. Our expenses include rent expense and salaries expense totaling $2,450 in expenses. So our net income is $8,750. This is why you prepare the statements in order of the income statement first, then the statement of retained earnings, then the balance sheet. If you've already completed the income statement, then you know net income is $8,750 and you don't have to recalculate that dollar amount. So if net income is $8,750 plus the amount we already had in retained earnings at the beginning of the period, we're looking at our total amount of retained earnings available to be used to be paid out in dividends is $9,700. Now, just because you have $9,700 in retained earnings does not mean you want to pay out dividends of $9,700. You do want to retain your earnings from year after year after year because you never know if you may have a bad year. So they told us in the account balance information that the company paid $1,000. So the $1,000 is paid in dividends. That's going to reduce our earnings. So we had $9,700 of retained earnings. We subtract $1,000 of dividends that we paid during this period to get to our ending retained earnings of $8,700. So you have to be careful to pay attention to your retained earning balances. Is it your beginning balance or ending balance that you're given? What we were given was our beginning balance of $950. We used that to help us to solve to get to our ending retained earnings balance of $8,700. Second requirement says, what does the statement of retained earnings report? The statement of retained earnings is going to report your changes in retained earnings for this period. So you start with your beginning retained earnings, add your net income, or subtract your net loss if you have a net loss, and then you subtract your dividends to get to your ending retained earnings for that period. So we're showing the changes for this period based upon net income and dividends.